The SEC is declaring an all-out war on crypto, or so it would seem, as we've just had some pretty disturbing news, this time from the CEO of Coinbase, Brian Armstrong, about what's coming next, about some legal action here against the biggest exchange in the United States and the first publicly listed crypto company. This is not just the news that you already know, but I have a little bit of a take, maybe a hot take as to what is actually happening here. So you're definitely gonna wanna strap in and listen to this one. And if you're excited for not just a very important breakdown of some extremely pressing news here in crypto land, but also what I think of as some color and a little bit of looking around the corners to see what could be the reasons that this is happening, then you're definitely going to want to watch this one. Smash that like button and subscribe for more updates like this, because every day we're showing you not only how to get ahead of this market, but we're helping you outthink the market. And I think that's worth at least liking and subscribing. With that said, let's dive in. So the news of the day here is that there's some weird action coming out of the SEC. Let's read through Brian Armstrong, the CEO of Coinbase's little explanation here as to what's been happening. 1, some really sketchy behavior coming out of the SEC recently. Story time. Millions of crypto holders have been earning yield on their assets over the last few years. It makes sense. If you want to lend out your funds, you can earn a return. Everyone seems happy. A bunch of great companies in crypto have been offering versions of this for years. Kraken, Gemini, BlockFi, you name it, especially big American exchanges actually do this. Coinbase came out recently and said we'd be launching our own version. We were planning to go live in a few weeks, so we reached out to the SEC to give them a friendly heads up and briefing. They responded by telling us the lend feature is a security. By the way, the laws of a security are very specific, and it's very hard to see how they apply here. That's just my own personal take, but okay, seems strange. How can a lending feature be a security? So we asked the SEC to help us understand and share their point of view. We always make an effort to work proactively with regulators and keep an open mind. I mean, if there's any company that is whiter than white and playing by the rules, it's Coinbase. They have done everything right. And again, they're already publicly traded and regulated by the SEC here. This isn't just some ICO here. They refuse to tell us why they think it's a security. This is where things get really strange, borderline a bit disturbing, and where you can start smelling the fish turn sour here. Anyway, instead of telling them, just asking, saying, hey, why is this a security? Help us understand. I mean, you have on one hand, the SEC is constantly saying, come talk to us, come work with us, and we'll help you understand. We want to work with you. We want to work with you is what they keep saying. But here you have Coinbase, someone who should really have a close relationship with the SEC, given their publicly traded status, reaching out, sending a friendly, hey, we're adding this feature, just wanted to brief you. And instead of getting explanations as to why they're getting blocked here, they get a subpoena for a bunch of records. They comply. They demand testimony from the employees, the SEC that is. They comply. Again, you can see here a pattern of compliance and open communication. And then they tell us they will be suing us if they proceed to launch with zero explanations. So look, they're committed to following the law. Sometimes the law is unclear. And in this case, the law around crypto is completely unclear. There's absolutely really no clarification, no guidance with crypto. And that's why we have the innovator's dilemma going on here. It's another topic, but it has been plaguing America. I'm still optimistic, I will say right now, that this is all going to end up working out in the benefit of the American people. But right now is a messy part. And this is exactly what's going on. So if the SEC wants to publish guidance, we are also happy to follow that. They're saying, hey, look, just tell us what the guidance is. It's nice if you actually want to enforce this evenly across the industry, by the way. And they're saying this because, of course, the reality is there are other competitors to Coinbase that are actively providing yield, and they're not getting sued. They're not getting sued by the SEC. And Brian's saying here, but in this case, they are refusing to offer any opinion in writing to the industry about what should be allowed and why. This is where it gets quite disturbing, because the reality is that this industry is being gatekept right now by very unclear regulation. Everyone is trying to play by the rules, everybody, and there's just no rules, right? So how do you play by rules that don't exist? Well, what happens is what you're seeing with XRP and what you're seeing with Coinbase is essentially the regulators are just deciding when someone has broken a rule, and they're using essentially their subjective judgment here as to what that looks like, but they're refusing to actually proactively go out and set guidance like every other industry in the history of humanity. So anyway, let's continue on here. And instead, they're engaging with intimidation tactics behind closed doors. This is the really annoying part, right? Is that they don't want to come out and be public about anything. It's all behind closed doors and private conversations with Coinbase. Whatever their theory is here, it feels like a reach/land grab versus other regulators. Meanwhile, plenty of other crypto companies continue to offer a lend feature, but Coinbase is somehow not allowed to. Gensler in his confirmation hearing said it's important for the SEC to provide guidance and clarity. That was like what he got essentially brought into the SEC to do. Sometimes that's a clarity that will be a thumbs up, but even if it's a thumbs down, it's important to provide that. And this is literally from this year. You can see this is a verbatim quote. If you don't want this activity, then simply publish your position in writing and enforce it evenly across the industry. Now, of course, this is where I'm going to start going into my 500 IQ move by Brian Armstrong. We'll get to that at the end. Ostensibly, the SEC's goal is to protect investors and create fair markets. Now, who are they protecting here, and where is the harm? People seem pretty happy to be earning yield on these various products across a lot of other crypto companies. So this is the other thing, right? Is who are they protecting, right? The only thing that I can understand that they're protecting here is that 0.01% APY coming from bank deposits. I don't see how this protects the consumer. No, I'm very happy earning on my crypto, extremely happy. I'm overjoyed. In fact, crypto yield is one of the things that I plan to use as a key part of my own personal asset management strategy. It's a key component of why I'm so in love with crypto right now, beyond, of course, the disruptive gaming stuff. Shutting these down would arguably be harming consumers more than protecting them, and by preventing Coinbase from launching the same thing as other companies already have, they're creating an unfair market. So it's not protecting consumers, and it's an unfair market. Those are the sort of two pillars of what the SEC is supposed to be doing here. They're not doing either of them. In May of this year, I traveled to DC, this is Brian Armstrong, and he met with every regulator and a branch of government he could. The SEC was the only regulator that refused to meet with Brian Armstrong, saying, we're not meeting with any crypto companies. This was right after they became the first crypto company to go public in the United States. You think that meeting with the first ever SEC regulated publicly traded company would be something of interest for this regulatory body that has an interest in having a strong communication with crypto companies. Very, very interesting. Gensler had been confirmed just a month or so prior, so he brushed it off as SEC is still getting its feet under it. Now he's not so sure. Of course, he's not so sure. They've always tried to be good actors in the space, leaning into sensible regulation, even when it's difficult or expensive. We try to think about what products we would want for ourselves and what risks we would want our families to be aware of before launching products. We will keep following this approach. Yet here we're being threatened with legal action before a single bit of actual guidance has been given to the industry on these products. If we end up in court, we may finally get the regulatory clarity the SEC refuses to provide. But regulation by litigation should be the last resort for the SEC, not the first. Our door remains open. Hopefully the SEC steps up to create the clarity this industry deserves without harming consumers and companies in the process. America could really use all of us working together to figure this out right now. Now, before I give you my opinion on this, let's just see a little bit of the reaction to this across the industry. First and foremost, from some guy named Mark Cuban. Brian, this is regulation via litigation. They aren't capable of working through this themselves and are afraid of making mistakes in doing so. They leave it to the lawyers. Just the people you don't want impacting new technologies, you have to go on the offensive. So this is what Mark Cuban believes is the right path here, is to go on the offensive against the SEC. And personally, I think if there's any company probably positioned to do this, it is, of course, Brian Armstrong and Coinbase. Now, we see here Jerry Brito. Jerry Brito is the executive director of Coin Center, the DC-based crypto think tank for crypto policy, and they're essentially a lobbyist for crypto. He says, if true, this is pretty underhanded. I know it's easy for me to say, but Coinbase should go ahead and launch its product. Let the SEC sue and go to court. Let the SEC make its case and let a judge decide what the law is. Essentially, once again, this is regulation by litigation. It's really not the ideal approach here. I thought Gensler, the whole point of him being an MIT blockchain professor was that he would try to make an even-handed approach to these laws. You know, in his defense, it's pretty hard stuff. And the problem is that once they regulate it and they provide frameworks, the actual floodgates are going to open up because people will know they're on terra firma and that they're building on regulatory safe haven grounds. And the big money bags are going to pour in at that point, and crypto becomes unstoppable. So by regulating crypto, you give it legitimacy and you essentially enshrine it, you crystallize it in the future. And you got to feel like, hey, if there's any entity that doesn't want this, it's probably the banks, right? But more on that later. You also have Maya Zahavi saying the only explanation for SEC's harsh stance against Coinbase Lend that makes sense is if the SEC is actively building a case against the USDC being a security in private, wouldn't that be ample reason to A, warn that you'll be sued if you launch, B, not be explicit about why Lend isn't compliant? So this is maybe a little bit of a backstory here that USDC might be under attack, that USDC as a representation of the dollar is essentially what they will go after. And this has been a theory that essentially stablecoins and actually collateralized stablecoins are going to be the things that are attacked here. Of course, this might actually be extremely bullish for algorithmic stablecoins like DAI or UST. We'll talk about that more later. Again, finally, we have Ryan Todd saying targeted advertisement and gamification that encourages gambling on YOLO options and meme stocks / fair game, but God forbid allowing retail to earn 4% on a tokenized dollar. Amen. So what Chainlink God 2.0 is saying is this is called legally enforced racketeering. Refuse to publish guidelines. Tell companies to work with SEC. Sue them after they ask for help and profit. Who is the SEC protecting? The consumers? Lol, no. It's the traditional rent extracting prison of our financial system. We also have Lark Davis saying US investors get so screwed in crypto. No token sales. SEC trying to crush lending. Infrastructure bill attacking staking. Airdrops limited. BTC ETF. Futures backed. LOL. Limited leverage options. Accredited investor laws. Seems like they are trying to keep you poor. I'm going to go ahead and like that. We also have Danger saying the SEC protecting Wall Street since 1934. And so we also have David Schwartz here, who's the CTO over at Ripple, helped build XRP. And obviously they've been in super hot water of late with the Howey test stuff and the SEC. He said, it's a straightforward application of the Howey. Lend is exactly like an orange grove. How can you not see it? Now, of course, this is all very, very sarcastic. The original Howey test, which is what the SEC bases its securities laws on, was based off the interpretation over who owns an orange grove or a shared orange grove. This is a law from 1934. And so the joke here is obviously lending USDC is the same as an orange grove. How could you not see that? How could you not see that, Mr. Armstrong? Anyway, continuing on, we have Jesse Powell chiming in here as well. Now, this is bad. This is really bad. Now, the only explanation I could possibly think about is that USDC is in hot water. Now, this would be a sort of attack on crypto in general, because by criminalizing USDC, you essentially remove one of the biggest resources for the crypto ecosystem, which is stablecoins and stablecoin yield. Now, of course, you're not going to ruin algorithmic stablecoins, and it's really hard to argue that algorithmic stablecoins are bought with the expectation of profits from the work of others, or that they're securitized dollars. So this might be a big exodus from the USDC into algo stables. Now, the reality is here that we don't really know where the buck is going to stop here. What we see is a lack of clarity, and it's very disheartening. But there is a potential here, and here's the 500 IQ take here, is that first and foremost, Brian Armstrong feels like he's being uncompetitive, like he's not able to compete with these other, the BlockFis and the Krakens and the Geminis that offer stable lending yield, which is a product that every single exchange now has. So first and foremost, the more obvious play here is he's kind of saying, hey, look, if you're going to sue us, sue everyone else too, or at least send them a harshly worded letter so that they stop offering their competitive products that are drawing users away from us to them. That's step one. But my other thought is that actually this might prompt the SEC to make different legislation about DeFi in general. So if you want to go down the rabbit hole here and say that maybe Brian Armstrong is actually trying to attack DeFi here, I'm not saying he is, and Brian, if you see this, I apologize. I'm just saying, hey, look, there's a potential here, an outside chance that the biggest threat to Coinbase's business model is in fact decentralized exchange and DeFi. And maybe just maybe, actually DeFi is the thing that he's kind of forcing the regulator to make a decision on quicker than they would have otherwise done, meaning that essentially this is a play to try to get the regulator focused on the biggest threat to centralized exchange, which is decentralized finance. That is kind of like the dark shadowy approach. I'm hoping it's not. I think that the reality here is that Brian is just about to get sued, and it's really not fair. And this is a real interesting moment where you have two of the companies that everyone agrees that whether you're on one side or the other, we like these companies. These companies are a part of us, right? We have Uniswap and Coinbase. Everyone's got a Coinbase. It's how they first bought their first Bitcoin, and everyone's got Uniswap. And whether or not centralized exchanges are the devil in your mind, the reality is that these are critical pieces of infrastructure for onboarding the masses. And what we know for a fact is that what we will see is not just a fight where you have the SEC targeting Ripple, which is objectively not that popular compared to other cryptocurrencies. What we're about to see is a united crypto community that is dedicated to fighting against injustice. And I think that the power of this united online community will be something extremely, extremely hard to topple. And it's really important that this community moves together and protects itself, because there is so much magic here. This is the future of our internet, the future of our online commerce, of our ability to have sovereignty and freedom over our finances. There's a part of me that is going to be really excited to see what happens here. While it could be the case that Brian has other motives for doing this, the scariest thing would be if they attack USDC, which is such an important part of our crypto economy. Again, there is a lot of this story yet to be written, but crypto is under attack, and everyone needs to move in lockstep and show that the power of this community is something that you do not mess with, and that this is our freedom, this is our right, and this is protected by our First Amendment to engage with our money how we want, I believe. Regardless, I remain eternally optimistic that we will end up with an ecosystem that favors innovation, that allows for America to be dominant, and that we don't just drive every good actor overseas and offshore to essentially set up shop in a country that's more hospitable, because that's exactly what's going to happen. And this is going to drive all the biggest brains and smartest folks and best chance at American dominance, at least in business and in culture, overseas. Look, I love America. I would prefer to stay here. It's my home. But it's pretty sad to see that this is the approach by the regulators when there's not a single other country in the world behaving like this. It's only the United States. Let me know what you guys think. I'm trying to remain optimistic here and look around the corners, try to find answers that aren't just all doom and gloom. But I think that this is just hopefully another FUD storm that leads to clear regulation in the not too distant future and a crypto future for all. Let me know what you guys think about this video. If you got some value, please smash that like button. As always, I'm Elio Trades. You can find me on Twitter at Elio Trades. Make sure you don't miss an episode this week, because we're going to be giving away a ton of stuff and giving you the gems, the secrets to success here in crypto. All you got to do is subscribe and put that bell notification on, and you'll be made aware the moment we put out our videos. Time is money here in crypto, so make sure that you have that bell notification on. With that said, I'm Elio Trades, and I'll see you soon on the next episode.